And the timelines was, I think, one of the most fascinating things. I think over the next preceding about 8 years or so was roughly, I think, about how long it took for the legislation. So the legislation, correct me if I'm wrong here, got passed in April 5th, I think, 2012, which was the...
Yeah, that ended up being the easy part. Within 5 months of starting the petition, we were invited to the Rose Garden to watch Obama sign it into law. And that's where we started the company. But then the hard part, when the law was passed, Congress told the SEC they had to roll out the regulations in 9 months. But it ended up taking over 4 years, which was kind of an unpleasant surprise to us.
So Nick was planning to have this all set up and running within that 9 months, but that 9 months turned into 4 years. So now we're early, mid 2016?
Well, yeah, I mean, part of the joke of Wefunder is that we never thought it was going to take 4 years. We always thought it was 9 months away. So we applied to YC, and in January of 2013, we kind of realized that the SEC is going to miss the deadline. And so for those 4 years until 2016, when the regulations were finally actually rolled out, we were doing what I call rich person crowdfunding. Basically, now you would kind of call it more like a very large angel-less syndicate where wealthy accredited investors could invest in mostly YC companies. Kind of like an online VC, which wasn't what we wanted to do, but kind of kept us alive until the SEC actually rolled the regulations.
So after you got into YC and you got the initial money from YC, how much money did you raise, from VCs post-YC?
None. We've raised pretty much every dollar in Wefunder except YC through Wefunder itself, which is kind of cool.
That deserves a round of applause, I think, by itself. What was the number? What was the total number so far?
About 20 million over 10 years. So we've always been pretty lean. And our first pre-seed round was in 2012, where we raised about $500,000 before we even got into YC. And I kind of knew that Wefunder would work when our users, the people who had signed the petition and supported us along the way, without talking to me, invested, which was kind of cool.
That's awesome. That's awesome. Now we'll continue on this journey with getting to kind of present day of where Wefunder is presently. But there's a really cool story that Nick shared with me yesterday around this cross-country train ride with him and his team. And really, it just goes to show, I think, the power of getting in front of people, but also some rather cool stories. So I'll set the stage. So Nick and his team, team of eight, went across country. So take it from there.
Well, to back up a little bit, the way this works is that when the SEC finally is about to release the law and regulations, they give you a 6-month heads up. And so we had a 6-month notice. We knew for certain the law was going to get rolled out on May 16th, 2016. At this time, we're a very small team, only 8 people. And it was kind of off to the races. Kind of the conventional wisdom was that AngelList or Indiegogo was going to compete with us directly and just squash us. And we're only small team of 8 people. And so part of it was a massive amount of engineering work to make sure our product was ready. Then the other part of it was how do we get in front of as many companies as possible, not just in Silicon Valley, but across the country. And so my idea was let's put the entire company on the Amtrak and let's just take the Amtrak to New York. And every day we would stop off in a different city, have 24 hours exactly to meet as many founders as possible, then get back on the train and go to the next city. And it was just a lot of fun. A small team of 8, kind of your best friends on a train ride for almost 2 weeks. And then it gave us a lot more empathy for founders or small business owners not actually in Silicon Valley. We toured factories and restaurants and a bike shop, a photography studio, kind of a huge wide swath. And ended up being incredibly lucrative for us, where a lot of the early companies that went on to Wefunder, we had met on this train trip. And so we finally like launched on like, the official first day it was legal. We had like 25 companies actively raising, and no other competitor had more than like 2, mostly because of the train trip.
And what was the aha moment you had when you realized, wow, this is really, really going to work?
Wefunder or the train trip?
Oh, Wefunder. It was a gentleman that never met.
Yeah, that actually was in like 2012 when we first did our like pre-seed round, raised $500,000. And then this gentleman from the Netherlands that I had never talked to or met just wired in $15,000. I was like, cool, something's going to work here.
Yeah, thanks for that, Nick. Now, how much in total to date has founders raised on Wefunder?
I think close to 700 million.
Wow, that's I think another large round of applause.
More to go.
And there's actually, so I want to jump now into how a lot of the folks here in the crowd can do that as well. There's actually a handful of specific questions I had prepared. Oops, just a second. Okay, that's the wrong list. Okay. Let's just jump into a question. So if I was a founder and I wanted to get started with crowdfunding, where exactly would I start?
Well, it depends what kind of company you have. The best fit for Wefunder right now is after you have some passionate early fans or customers. And if you give them a chance to invest, and if they really like what you're doing, they invest pretty quickly. So for most founders, I would advocate waiting until you think you can raise at least like $50,000 to $100,000 from the customers and users that we have in your product.
That's excellent. Now, are there specific exemptions or regulations I need to be aware of as I'm filing, setting up a company and filing and things like that?
Yeah, I mean, there's a bunch.
Or does Wefunder take care of
We take care of it for you.
Right.
As a founder, you should know you have to disclose this thing called a Form C. And most of it's pretty easy. We help you do it all. It's like who owns more than 20% of the company, what are your biggest risks, who are the officers. The one thing that can be a little more involved is you have to release your financials. And if you want to raise $5 million, you have to basically get an independent CPA to go review them for you. And we have accounting partners that can do that pretty quickly and relatively cheaply for that. But that's like pretty much the only like real barrier to doing this. Everything else can be done like in under a day, and we can help you do that.
That sounds really easy. Has anyone in the crowd, by a quick show of hands, tried crowdfunding before for their current companies? Awesome. So not too many. So hopefully we'll see a slight influx of signups after this. It sounds very easy. I'll go ahead and open up to the audience. Is there any questions? Go ahead first.
So how do you take care of the gap payment situation like
No, that's a great question. One thing we didn't cover was that when the law first rolled out in 2016, we didn't have a very good business because there wasn't actually a good cap table solution. Back then, you'd have a bunch of investors directly on your cap table, which is not ideal. So kind of my personal biggest priority was to lobby the SEC and Congress again to fix those regulations so that companies would actually want to use Wefunder. And the biggest and most important fixed regulations happened in early 2021, where they basically legalized single-purpose vehicles, SPVs, for crowdfunding. So now all the investors invest into a fund, and the fund makes one investment into the company. So from the company's standpoint, there is only one investor. And the founder gets to choose which of their investors gets to basically lead that SPV and sign any documents for follow-on financings or whatever they need.
Good.
I have a couple of questions. So one is how does crowdfunding VC funding meets? Because VCs usually buy out non-accredited investors, and something like this, let's call now it's fundraising. And the second question is, what do you think of a recent law in Congress that allows anybody to become a accredited investor with a investment incentive without making that voice?
Yeah, great questions. For the accredited investor threshold, when we first started Wefunder, you had to be basically have $1 million or more in net worth or have more than $200,000 of income for a couple of years straight. So it was just like financial thresholds. Since then, this has been slightly liberalized, where if you also have a Series 7 or a Series 65, you can be considered accredited. The SEC has signaled that over time they would like to develop a specific test just to determine accredited level. And I'm going to guess it's probably going to happen in the next few years. Congress is also proposing mandating the SEC do this. So it's quite possible that the SEC won't have the voluntary option to do that, even though they already want to do it. But long story short, within the next few years, there should be other different tests one that could take to be accredited. I think that's a great idea. As for VCs buying out unaccredited investors, I am not aware of this happening on Wefunder since we've had SPVs. And actually, I think the opposite has actually happened since the laws were reformed. Like a few months ago, Substack used Wefunder. Replit and Mercury, all backed by Andreessen Horowitz. And so I think we're changing the conventional wisdom where, of course, take money from venture capitalists. Like you would like to have Andreessen Horowitz as an investor and someone from there on your board, but reserve kind of a small allocation to your most passionate fans and customers because there's a different kind of marketing value there. Like if your customers are actually owners, they're much more likely to love you and spread the word, give you product feedback, help you recruit. And kind of our major goal of the next few years is to accelerate this happening where it should be the new normal. Like, of course, you should let your customers invest. So actually, we don't actually call this crowdfunding anymore. Or I guess the full jargon is equity crowdfunding, which is kind of a lot of syllables. We call it just doing a community round. Like, sure, do a venture capital round, but reserve a small part for your community.
Excellent, excellent. Go ahead.
Oh, we support every security, saves, convertible notes, preferred stock, revenue shares, waterfall agreements for movies, any kind of security whatsoever. Wefunder is really, really diverse. We have traditional tech companies, but again, we have films, art studios, restaurants, breweries. So usually on average, about half the money comes from the company's own customers or fans, and on average, about half comes from existing Wefunder investors. And over time, you want to make that come a lot more from Wefunder's existing investors.
Go ahead, right in the back. Would you like to come up and use the mic, actually, so we could? Go ahead, go for it.
I missed the first one. What percent of investors are what? Oh. I don't know that offhand. I guess it would depend how you define social impact. I guess in my view, I take a slightly broader level at it, where every founder really cares about some way they want to impact the world. Maybe it's they just want a restaurant in their local community. And people who care about that can basically vote with their dollars to support it. So is a restaurant like, an ESG company? Like, no. But is it good for that community? Apparently they think so. And I'm sure someone in my company has an analysis of like ESG. I don't know it offhand.
Yasmin?
Two questions. One, is raising through Venmo really illegal? So we got to do it tomorrow?
If you get free money on Venmo or you sell a product on Venmo, totally cool. If you sell a security, which is basically any expectation of a future return, you can accept money on Venmo, I suppose, from an accredited investor who you know is accredited. Otherwise, you need to use Wefunder to make sure it's legal.
My second question is, a few people asked me today, and they were like, there's a pitch competition happening on Sunday, and they were like, you wanted to raise, we also want to raise, right? And I was like, just go make a crowdfunding campaign. How long does it take to, I know how long does it take to upload a campaign on Wefunder. How long does it take for it to be accepted?
Good question. So there's like a nuance in the law. There's this thing that's legally called testing the waters, which means you're allowed to talk about how you might want to fundraise and tell people your idea. You're not allowed to accept money or talk about your exact investment terms, but basically almost immediately you can basically put a page on Wefunder that explains your idea and then solicit interest, and people can make reservations to see if they would want to invest or not. And so you can go get there's $200,000 of interest. And then if you want to go forward, then you have to file this thing called a Form C. So one of our account managers will basically sit down with you for a few hours and collect that information. Then the only bottleneck there is how fast can you produce financials? Some companies can do it immediately, and some companies need to go talk to an accountant to make it look professional.
Any other questions? Gentleman in the back.
You guys speak a little louder. Sorry.
Would you like to come up and use the mic, or just speak up?
If you shout, yeah.
You have to shout though.
Yeah, we typically advise companies to set the terms on Wefunder as their existing investors that are usually accredited that they raised before Wefunder. So in most cases, there's not really a premium on valuation. They're just matching the terms. So if a company had raised, $1 million on demo day, they would just give a $500K allocation to Wefunder on those same terms. So there really should be no different 409A impact than was already done typically. Was there a question? I forget.
I believe that was the meat of your question, correct?
Okay.
Yeah.
So I think I heard you correctly, but
let's just repeat the question really quick. So you're asking about the number of investors you're allowed to have on a crowdfunding campaign.
Yep, that was another very important regulation change that happened in 2021. Before 2021, not only would the investors be directed on your cap table, but they would count towards this thing called the 12G limit, which is if you have more than 500 unaccredited investors and more than $25 million in assets, you're effectively forced to go public, which no one wants. The regulatory changes in 2021 fixed that. That legalized SPVs, and then it also clarified that any investor in that SPV counts as one shareholder of record for the 12G limit. No, it's 2,000 total investors, but only 500 unaccredited investors, which is also not very helpful to us in 2016. But yes, it's correct. It's 2,000 total investors or 500 retail investors. But with Wefunder, everybody in the SPV only counts as one investor, which is like really important. I couldn't hear that. Oh, one more time, sorry.
So your question was, if you want to give, is it investors or employee, or essentially people working at the company? Giving influencers equity
For free.
For free.
Oh, that's interesting. So actually, we've actually worked with our lawyers to develop a way to give users equity for free under the law, which is called regulation crowdfunding. We've not actually executed on it yet. We've not done it. But if a company is like truly interested in giving equity for free, then Wefunder can actually help you do that. Most companies have not given equity for free at scale because it's very, very complex with accounting and legal issues. But we think we have a pretty elegant solution using regulation crowdfunding.
Yep, go ahead.
We actually do. I forget what it is. I think it's a 20% discount, but my business development team can totally hook you up.
Awesome.
And Wefunder itself is also a PBC.
Any other questions?
I actually invested in the company through Wefunder, and I read the terms that they actually connect with the investors to the LLC. You guys set that up yourself, or do you have to take care of that?
No, Wefunder sets it up all ourselves. So from the company standpoint, we make it incredibly easy. The LLC is what we call an SPV, and it's really, I guess, detailed legally, but it's basically a series LLC where you set up a different series for every company automatically. We basically make it almost invisible to the company in terms of like burden.
Excellent. Any other questions? Awesome. Oh, okay. Okay, we got one more. Can you speak up a little bit more?
If I understand your question correctly, all the investors into a company will invest in the SPV, which then is one investor into the company. Again, the 2021 regulatory reforms clarified that all individual persons in that SPV count as one investor for shareholder of record for the purposes of 12G. Very good question. Most people don't know that.
Very good question indeed. Any other questions from the crowd? The question was, what are the best types of startups for crowdfunding?
I think there's three broad categories. One is the obvious one. If you're printing money, people love investing in people printing money. The other one is companies with a really passionate fan base or users or customers, people who really care about this thing coming into existence. So companies with some traction that have like these passionate fans do pretty well. Then the third category, I kind of in my own head call it like this is really, really cool, or I really want to support this. This can be things that are like hard, like we've had a fusion reactor. And this is like people understand that this is really, really hard, but they want to like basically take their lottery ticket and go put $100 in so this scientist can go do more experiments. We've had a company trying to cure cancer in dogs. People like dogs, don't like cancer. But those are doing very, very well. We had a company called, well, I can't name it because it's actively raising, but a company planting trees for carbon offsets. And it's basically more like you just get paid back as a loan. People also want to support that. They feel like they're doing good while making money. So it also does very well.
All right. Thank you, everyone, for listening. And thank you, Nick, so much for coming up and taking the time to chat with us, opening up this beautiful space. Let's give him a very large round of applause.